and then we'll go straight to the presentation of our work, and then to the second part, which is precisely about your views and a few questions that we have put there for you to hopefully provide us with useful feedback. A few words on the Commission's action plan. I'm sure everyone is familiar with this, but the actions that the Commission has envisaged in the context of disclosure and accounting rulemaking are in action number 9 of the action plan. And I would say they address mainly two aspects. One is about, strictly speaking, non-financial reporting. And on the other hand, there are actions that have to do with financial reporting in the context of sustainable finance. With respect to the first part, to non-financial reporting, the Commission is considering the current requirements in the non-financial reporting directive and seeing how this could be improved if needed in practice, and also whether digitalized reporting should apply also to sustainability information. The second aspect linked to the first one is the European Commission's non-binding guidelines. As you know, the Commission, together with the Non-Financial Reporting Directive, issued a set of non-binding guidelines which are meant to help issuers in producing their non-financial information, and the Commission is considering whether those guidelines can be further improved. A third action in this area of the non-financial reporting space has to do with the establishment within EFRAG of the European Corporate Reporting Lab that is meant to provide a forum for discussion of non-financial disclosure practices amongst issuers as well as investors. Moving more on the financial reporting side, still in the context of sustainable finance, the Commission has looked or is looking to assessing how IFRS 9, the financial instruments accounting standard, is doing or is contributing to long-term investment, and therefore has asked EFRAG to assess and to provide some input in this regard to the Commission. And one last point is the assessment of the IS regulation with respect to the endorsement process of accounting standards, whether this endorsement process today caters for the needs of sustainable finance. All these actions are quite encompass, I would say, a notion of sustainable finance that is quite broad. It's not only non-financial information, but is also financial information, as I said, in the context of sustainable finance. And these are all actions that are quite relevant in ESMA's mandate of promoting transparency for financial markets, protecting investors, and promoting financial stability. So these are quite relevant activities for us as well. So what we have been doing so far in this area, I would say that in corporate reporting, the considerations about sustainability flow mainly through two main activities. One is the work on supervisory convergence. This is the work we do to promote consistent application of EU legislation in the area of disclosures and reporting, and the other area is single rule book. And single rule book has to do with ESMA's contribution to the development of reporting requirements in Europe, and we are also obviously quite active in this area. What is important for us under both those aspects is that firstly the requirements provide information that is transparent to the market, but secondly that also there is a good integration between financial and non-financial, or pre-financial as some would say, information. So let's consider more in detail, more concretely, what we have done in those areas. So first of all, looking at existing requirements, we have applied well-tested tools in the area of supervisory convergence to the non-financial reporting aspects. As you might know, ESMA already have quite a long-standing experience on financial reporting, of discussing and coordinating the discussions amongst different national authorities on IFRS matters, and now we have, to some extent, translated that experience also into the non-financial reporting space. So what we have done concretely is, first of all, to issue, as part of our yearly statement on the enforcement priorities, for the first year, also a dedicated section that deals with non-financial information. So in the European Common Enforcement Priorities for 2018, you will see that we have expanded on the issues related to non-financial information. We have particularly focused on three aspects. One is the importance of the European Commission's guidelines for non-financial reporting. Obviously, these are non-binding in nature, but we think that they could help issuers in improving the quality of their disclosure, so we have referred to those in our statement. In addition to this, we have highlighted the importance of environmental disclosures and specifically climate change. I heard this morning quite a number of comments about the importance of climate change, environmental matters. Obviously, this is not the only focus of disclosures, but in this year's statement, we wanted to put this element under the spotlight, the importance of climate change disclosures. Another aspect we have highlighted this year is the importance of key performance indicators. We have seen in the 2017 reporting practices, obviously on few reports, that some KPIs were not necessarily consistently used. So for example, we might have seen the disclosure of environmental policies, but not necessarily any indication of how progress was being made towards the achievement of those policies. So we highlighted also the importance of disclosing good quality KPIs. And one last aspect that we have highlighted is the importance of disclosing both aspects. The impact of the non-financial matters on the companies, but also how the companies impact the non-financial matters, so the environment, the social issues, the employee matters, etc. So this dual nature of impact reporting is something that we thought it was important to highlight. The second aspect that we have focused on in the context of the non-financial reporting directive is to set up a dedicated forum for discussion of non-financial reporting matters. This goes under the name of the Narrative Reporting Working Group, and it is a forum in which companies, I should say enforcers, discuss companies' disclosure practices and also discuss what are recommendations that can be made to companies to improve their disclosures. This is to some extent a similar experience to what we already have today in the IFRS space. In the financial reporting space, we have the European Enforcers Coordination Sessions, which is a group that has been working now for a few years on IFRS matters, and we have started last year with this new group, the Narrative Reporting Working Group, that does a similar type of work in the area of non-financial reporting. In the context of supervisory convergence, I think in a nutshell, this is what we have done so far. Related to the non-financial reporting directive, there is also an active monitoring work that we are doing on the work of the European Commission's Technical Expert Group on climate-related disclosures. As you might have seen, there's been a recent report issued from by this technical expert group, and ESMA observed the work of this group, and we found it quite interesting to see that the group promoted an alignment between the European Commission's guidelines with the recommendations from the Task Force for Climate-Related Financial Disclosures. Moving on to the contribution to the developments in the non-financial reporting space, I would say more to the single rule book type of work that we have done. We have commented this year on the European Commission's consultation on the fitness check on public corporate reporting. We have commented on a number of aspects, but in relation to sustainable finance, I would like to highlight three main areas. One, obviously, is non-financial reporting. We indicated that, of course, it was a bit early for us to express a view on the application of the non-financial reporting directive, although already back then we could envisage that the existing framework for disclosures doesn't necessarily cater for increased comparability in non-financial reporting, precisely for the reason that there is no specific disclosure framework that is required to be used. So due to the variety of frameworks, that could lead to the risk of limited comparability, and also that may challenge also the enforceability of those requirements. The second area on which we have commented in the consultation for the fitness check is the IFRS endorsement process. Similar to the views that we have expressed back in 2015 for the evaluation of the ICE regulation, we didn't see any major need to change the endorsement process as currently envisaged in the EU legislation. On the other hand, we thought that the endorsement process already has the key elements that could enable sustainability to be taken into account in the endorsement process of IFRS by means of the public good criterion, which, as you know, is one of the criteria that today need to be taken into account to endorse a specific accounting standard in the European system. So in this respect, we just recommended the Commission that if changes are needed in the endorsement process, that might be envisaged at the level of the public good criterion to better clarify that it also includes the notion of sustainability. One last point on the fitness check consultation that we have commented on and that relates again to sustainable finance has to do with digital reporting. As you know, ESMA has issued a regulatory technical standard to require the application of electronic reporting for IFRS consolidated financial statements starting in 2020, but that doesn't include the management report or other sustainability forms of reporting. And in the consultation to the fitness check, we indicated to the Commission that perhaps at this stage the times are not mature yet to extend digital reporting to sustainability reports, for the precise reason that I mentioned earlier, that the reporting requirements themselves are not structured yet. So there is no single framework for disclosures on non-financial information. Therefore, it is perhaps a bit early to think about digitalized reporting when there is no structured or uniform reporting on the basic requirements. One last point that has to do with still our work on single rule book has to do with IFRS 9. I mentioned earlier the European Commission's assessment of this accounting standard in light of long-term investment, and from that angle we contributed to the consultation that IFRAG launched earlier last year about the impact of IFRS 9, and our view was that IFRS 9 has just come into place, it's just being implemented, and therefore it's a bit too early to assess its impact, and there was also no evidence yet of any issues that IFRS 9 may pose to long-term investment. And we also took the view that we didn't think that recycling should be reintroduced for equity issues. So I would say, in a nutshell, this is what we have done so far in the area of corporate reporting for what concerns the European Commission's action plan. I would then now move to the second part that has to do more with your feedback on the information needs that investors and analysts may have in the context of sustainable finance. As I said earlier, we to some extent acknowledge that at this stage the reporting framework, the disclosure framework, may leave it open for companies to choose a number of disclosure practices, which may pose a challenge. But nevertheless, it is interesting for us to understand from analysts and investors what you think are the good features of quality disclosures in the non-financial reporting space. So what is useful information for you in this context? And this will also help us making recommendations to market participants with respect to to disclosures for sustainable finance. With that in mind, we have set out a number of questions, more general questions, and then we also have more detailed questions later on if time allows. I would say there are three main aspects we would like to hear from you, to hear about your experience. First of all is the usefulness of non-financial information as currently provided, the usefulness for investment decision making. And there are two angles to this. One is about the current legislative framework, whether it enables issuers to provide you with relevant and useful information. And the other angle is looking at the current practices, whether the disclosure practices that you see provide relevant and useful information. So I would say this is the first area on which we would like to hear whether you have any comments or views. The second area has to do with the usefulness of both financial and non-financial information for long-term investment. So it's not simply sustainable investments, but more specifically how financial and non-financial reporting can help investors take into account a longer term investment horizon. And the last point has to do with us, with what we can do as ESMA to promote better disclosures within the confines of our mandate, obviously, and within the limits of what is the existing regulatory framework and the non-financial reporting directive, but how you think we could further improve the disclosures that are provided to the market. I would perhaps stop here and open the floor for questions about our presentation, but also feedback on those areas in which we would like to hear your views. Thank you.
Thank you. Stan Dupre, 2 Degrees Investing Initiative. So on your first question, actually we, in the context of our research activity, we tried to assess the alignment of investment portfolios with the Paris Agreement. And so climate is probably the topic where the corporate reporting is the most developed and standardized. And the short answer to your first question is entirely useless. I mean, we didn't find anything in corporate reporting that was useful for what we tried to achieve. So we have been obliged to bypass corporate reporting and contract with business intelligence data provider to get enough information and granular enough information on the company's investment plans and assets to be able to understand their climate trajectory. So basically, all the data published by companies were mostly backward-looking and not granular enough. And so I think it's pretty kind of like telling that in the field that is the most standardized, when you have actually a user who tried to do that and apply the like an approach at like on a portfolio, you cannot rely on corporate reporting. So my understanding is I mean, if you're a user and you really want to inform investment decisions, either you need to connect that with financial analysis, and I will get back to this, but if you want to perform like non-financial analysis, you need comparable data, machine readable, and forward-looking. And my understanding is that the state of current practices is like miles away from producing something like that. And I would say on this specific topic, the Commission is going very slow in nowhere. Like, I was member of the HLEG. Basically, the Commission got bullied by the corporate lobbies and ended up watering down even the recommendation of the HLEG on this topic. So my take from that is that there is the Commission, and I guess it's the same for the supervisor, they don't have the political capital to resist the lobbies on this topic. So I don't think the current approach will lead anywhere close what we need in terms of guidance to get comparability. So I think this is a challenge, and my understanding is the ESMA should probably approach this also with this kind of, if like the Commission is unable politically to develop detailed guidance that is prescriptive enough to get it something comparable, what is the plan B? Because everything seems to rely on the assumption that they will eventually produce something that will be enforced, and every evidence suggests that it won't be the case. On the question of your second question, like the financial use, long-term financing, as I mentioned before, when you review the financial reporting of listed companies, they don't discuss long-term risk. So I think this is in the remit of the ESMA actually to provide more detailed guidance on that. And it's not non-financial reporting, but at least it's kind of financial reporting with some discussion of these sustainability issues. And sorry for the long response, but on your last question, I think it would be very useful, like the ESMA is supposed, I understand, to inform also the design of public policies in this area through research, and I think it will be good on a few topics to put yourself in the shoes of the users. And so other supervisors are starting to assess the portfolios of regulated entities on climate criteria, for instance. You're possibly in a position to do that, which will allow you to understand at a very technical level what is actually required from issuers to perform this analysis. And so market authorities are starting to do that in other countries, or considering this. EIOPA will do this, and so I think it will be a nice way for you to put yourself in the shoes of the users and understand what is relevant. And I think the next step after that, I mean, that's a first step in this direction, would be to kind of have a database of aggregating non-financial reporting and see if it's usable. And I don't see any obstacle to a public database in this field, and at least it will allow the supervisors and the regulators to understand if the disclosure meets the standard of comparability and machine readability.
From AFEP, again, the French Association of Large Multinational Companies, and I'm also a member of the newly created EU Public Reporting Lab within EFRAG. Maybe, again, the French perspective and experience. I think French sustainability reporting is among the probably most advanced in Europe and worldwide. It's not only us saying that, but also independent analysis, because we have had sustainability reporting obligations since 2001. So we've quite an experience. And even for our members, which are the big French multinational companies, they are really struggling with the ever-increasing reporting demands. urgency and climate change and all the sustainability issues which are being incorporated in investment decisions, and that's a good thing which is happening. But the problem is that there is a lack of coherence between all these individual initiatives. To give you an example, we are reading at the moment the TED report on corporate climate-related reporting in order to align the European Commission's guidelines with the TCFD recommendations. This report is not referring at all to the new ISO standard on greenhouse gas emissions. There is no reference to it, and the scope 3 of CO2 emission reporting, which is a huge challenge for corporates. It's a huge challenge. It is not dealt with in the same way. The ISO standard says scope 3 is about the most important emissions, but it's not possible to do it about the whole scope immediately, just like that. It's a huge issue. So that's just an example of the lack of coherence we are facing, and these individual initiatives are very interesting and legitimate, but for companies it's not possible to deal with all of them at the same time. So what we propose is really to have a corporate reporting dialogue which includes issuers, companies, preparers, because if the investors community they agree on what they want, but companies cannot do it, then we haven't advanced at all. So we really ask for the stakeholders you are listing to reach out to corporates, and I think European and French companies are really in a position to share their experience and their expertise of what is feasible and what is not feasible, and then we can go on, deciding what is the reasonable level of corporate reporting. And I think Europe has also a leadership to assume in this issue, because we have all these international initiatives, but I don't think we hear Europe enough, because we have a new and quite ambitious framework for corporate sustainability reporting with the new corporate reporting directive, and we do not hear the European voice enough in the international initiatives. So that would be my pledge.